this show, everyone. I am excited. I have been learning so much before I even started the show today. My first guest, who has been on with me now, he just told me 7 years, which is amazing. I have with me Monty Flack. And Monty is with, I should say it that way, Factum Financial. We're live on Facebook. I want to say hi to everybody out there. Monty, you are the best teacher I've ever met in my entire life. And I want you to tell everybody a little bit about Factum Financial, but really what you want to dive into today.
Well, thank you for having me, first of all. Factum Financial. Factum is an interesting word, but it's Latin meaning a statement of truth, facts. And that's what we teach about money. What we're going to be talking about today is tough money by using the infinite banking concept. What is infinite banking? And it's using a properly designed life insurance policy to warehouse my money, to store my money, to give me the benefits that I need, create a banking system. But what is tough money?
I don't know. Tell me.
Excellent. Tough money is, first of all, it's financial education. And the reason I bring that up is back in the early 2000s, my stepfather passed away. And I was living paycheck to paycheck as a school teacher. And all this time I've been putting money into my qualified plan, believing that I was saving for retirement. Okay, notice I put emphasis on saving. Well, when he passed, he had refinanced the house, 125% loan to value, to pay for his cancer treatments. Well, when he passed, there was no money to pay for a funeral. So, not knowing anything, I went to the funeral home and I said, "Can I make payments?" And they said, "No." I said, "Okay, well, where do I have money? Where do I have money?" "Oh, my qualified plan, my retirement plan. I'll call them and ask for money to pay for the funeral." And they told me, "No, you can't do that." And on top of that, 9/11 happened 2 years prior to that, and I lost over half my money. Now remember, I thought I was saving for retirement. Should one ever lose money in a savings account?
No.
No, never. And if it was my money, shouldn't I have access to it?
Yes.
Oh, so I had to have an awakening, a come to Jesus moment, if you will. So what I realized is I didn't have financial literacy. I had to learn the difference between savings, investing, and speculating. So that was the start. Well, with all that, with tough money, what we're really talking about is let's get to know our money. Where's it all going? Do you know how much you're paying in taxes? Do you know how much your rent or your mortgage? Just having an awareness of where your money's going. Oh, and then on top of that, let's find out how much you're saving. Because here, what we're programmed to do is pay everyone. Everyone gets their money. What's left over, I'm going to try to save. Because right now, if you had to guess, and I know we had this conversation earlier, but what do you think the savings rate in America is?
You tell them, because it's pretty amazing.
It's less than 5%. And it's been like this for over 25 years. There was only one little peak in the savings rate, and this happened during COVID. Why would it go up during COVID? What happened during COVID?
People weren't spending as much money. They weren't going out. Why?
What did everyone get?
Oh, they got their stimulus check.
Stimulus check. So all of a sudden we saw a little spike.
Oh, and then everybody saved they spent it out.
They spent it after that.
Yeah.
So if you look at what's happening, we call it a little financial pressure. Just not making it, right? Something's not right. I don't have enough savings, which causes problems, and my debt is getting higher and higher. And that's what's happening in America. Savings is still less than 5%, but our debt is getting higher and higher. So when we talk about tough money, we're going to talk about all these things. So you're familiar, you have some financial awareness.
What I was surprised with also what you said is most people in their savings account have, tell them.
Well, one of the things I had heard was less than $500 in emergency fund, a savings account. So if you needed tires or something, you don't have, typically, one doesn't have enough to pay
So
for
they
it.
have to put it on a credit
They
card.
have to finance it,
Mhm.
right? And I don't know, but aren't interest rates on credit cards pretty high now?
Right now.
Yeah,
Mhm.
pretty darn high.
So, first of all, I wanted to talk to you about the people that you're looking to work with. I know it's almost anybody, because we're all for pretty much, not everybody's an infinite banker,
No,
right?
no.
But to learn this, there are certain people that it happens to be really good for.
Yeah, and I think you hit the nail on the head when you said everyone should
Right,
have it, right?
right.
And when we talk about infinite banking, we talk about 4 stages.
Mhm.
So is somebody wanting to save more money, to build that emergency fund, right? So when we talk about the tough money concept, we should have tough money, meaning we should be able to weather any financial storm, recessions, hit with tires, whatever the case may be, and have access to money in case of an opportunity comes. That's what we talk about with tough money. So first of all, are you looking to save more money? That's one thing.
Everybody
right?
is, yeah.
And then we talked about debt, because is there a better way to get out of debt? Do you have a debt strategy? So I would ask these questions. Do you know how much you should be saving or earning in passive income to live the lifestyle that you've always wanted?
Well, first of all, you gotta ask me if I had passive income.
Oh, okay. Well, that tells me a lot. If you said no, it's gonna tell me whether you have passive income,
Right.
right? But first of all, what is that life you desire? Because here at Factum, we talk about the 5 areas of life. To have a vision, a goal. What's my spiritual life look like? Can I tithe more? Can I give more to kingdom builders? Can I do all these things that I'm called to do, right? What is my vision personally? What are the things I personally want to accomplish? And I remember as a kid, just because of the way I grew up, I wanted to make sure I learned Spanish, because it was my mom's first language. So play the guitar, I wanted to, practice martial arts. So what is that fulfillment of my personal life looking like? What's my vision for my family life? And it's very interesting, because my wife and I were going to Canada next month, eh?
Mhm.
Like that little
I like
Canadian
that.
accent. And the my granddaughters, I mentioned in the first thing, they go, can we go with you? Can we go with you? So my whole dream is to be able to take my family on these trips to experience, the Rockies in Canada.
Sure.
What is my vision in my business? My vision business-wise is to serve as many people as I can. That's what I'm called to do, because I know the power of what we're teaching. And then my last vision is financial. If I had that financial component, I could fulfill all these other visions.
Mhm.
Tithe more, do all these other things.
Well, it's interesting. Money is the root of all evil, but it's so important.
I love that you said that. Money is the root of all evil. It's actually not. It says the love of money is the root of all evil.
That's very true.
Right?
That's a perfect place. We're gonna go to a break, and when we come back, we're gonna talk further. Let me just say something. This is like really Money 101.
Money 101, and we'd like to take you to a master's class.
I would absolutely love that too. And you know something, what's really cool, everybody that's listening, let me say this, it applies to each and every one of you. You could check him out on his website. It is factumfinancial.com. Is that the same one we're using?
Yes.
Okay, and check him out. We're gonna be back in just a minute. We're still during the break here talking.
Right.
Okay,
Yeah.
everything is the same though, right? Okay,
Correct.
Good.
Correct.
So I happen to say that, I hope it's okay that I said that.
No, I love it. I
Yeah,
love it,
yeah,
because
yeah.
so many people, they hear that, and it goes to the rule of context when you read scripture.
But I also love that you said it's not the root of all evil, it's the love of money that's the root of all evil. Yeah.
What am I idolizing? Am I putting money before God?
And that's in the Bible.
That's in the Bible.
I mean, and that's like really frowned upon.
Exactly.
I know.
Right.
The love of money. I just wanna write that down.
No, that's good, because that comes that gets thrown in our face a lot because we are a financial educational company.
But also, and I don't even know that it's really all our fault. It's because, the government and all of these things that come up. Okay, for instance, I'll give you an example. You asked about, do you have a Netflix and all those extra things? Well, when we were younger, we didn't have to have that.
No.
Who in your wildest dreams would think? You bought a television, you used what was there, and you watched what was there,
Yeah.
right? Well, look what we have now. Now you have to buy in order even to see some of the shows that you even want. I mean, you can't watch a football game anymore. Sometimes that's on something you don't have, and you gotta go buy it to have it, and then you buy it, and you forget you bought it, and every month,
And that's the thing, that's why tough money is so important, because we review this every couple of months, or every month, some of us, because just like that, how many subscriptions do I have out there that I forgot about?
Yeah.
That's cost me $50, $60, $70 a month.
Sure.
Well, if I do some simple math, even $50 a month, that's $600 a year.
Yeah.
Over time.
It adds up, those little
adds
things
up.
add up,
Right.
yeah. And there's so many, now, I just can't even, what I'm thinking about in my head are some of even of the more business things that you have.
Oh,
But
yeah.
I don't know, what I want you to be able to do is to get to the root of being able to help them with the insurance.
Yeah. So we'll start talking about these questions a little bit more and then going through some of the categories
Okay,
in here, okay?
okay, so I'm gonna use some of these for the questions?
Well, you can, we'll come back to this page.
This
We
one.
talked about this one.
Okay.
And you said, first of all.
Yeah, I remember.
Because that tells me everything I need to know.
Yeah, I
right?
know.
And then this one, your savings to earn that passive income. And it's very interesting. I shared with a client this morning.
Oh, here we go.
Okay.
So welcome back, everyone. We're learning about money and really where to store your money, right?
Yes, because that's one of the 5 questions that we ask here at Factum. We call it the Factum 5.
Yeah,
I asked you earlier, do you know how much money you should be earning in passive income
right,
to live the desire, that vision
right.
that you
And
that
I
you want?
answered it.
Yeah. The second question would be is, do you know how much money you should be saving in order to live that life you desire? Third question would be, do you know how much money you should be holding in cash reserves to guarantee, to weather any storm or take advantage of any opportunity? And the fourth question, and this is the powerful question, do you know if the current environment that you're holding your money in is maximizing all the benefits that you, Carol, deserve?
Definitely, I would say no to most of all of those.
So the question would be is, would you like to know those
Right.
numbers?
Not even necessarily would I like to know. Should I know? Should I be more aware?
Yeah, because when here at Factum, we talk about building a solid foundation, financial foundation. If I'm gonna build a shed, I don't need a foundation. I can just do whatever I want, when I want, how I want, right? Can put it on some stakes, throw some gravel down. But if I'm gonna build a single-story house, I have to, by regulation, at least a 4-inch foundation. Well, what if I wanted to build a 2-story house? It's gotta be thicker. So what kind of foundation do I want? So first of all, it's financial literacy, knowing some vocabulary. The second is financial awareness. It's very interesting. People go to a mall, a shopping center, whatever you want to call it, and when they're looking for a store, and there's these kiosks everywhere.
Yeah.
And what does it say in a big red deal? You are here. I have to know where I'm at in order to know how to get to where I want to go. So here at Factum, when we talk about tough money, we talk about going through a process. And the very first part of it is going through a saving strategy to know where your money's going and to know, to do the math and figure out what is my savings rate.
So I just want to tell them the reason why they would need to have someone like you help them with that. Because a lot of people might say, well, I can check that out, I can make a budget, I can see where I'm at,
Sure.
right? But why have you,
Well, first of all, I'll put it this way. Tiger Woods, in his greatness, did he still have a coach?
yes,
That's why. Because we all still need that guidance, that supervision, that mentorship,
mhm,
that encouragement. Because I go back to a little process we call the giver. One of our foundational books at Factum is The Go-Giver.
I know that book, I've read it, yeah, it's a great book.
It's a great book. But if we take that giver and we use that as an acronym, I need to know your goals, first of all. Is this for you? What is it you're wanting to accomplish in life? Is it, do you know the numbers of passive income to live that life you truly desire? How important is that to you? Because if it's not really important to you, you're not gonna do it,
Mhm.
right? And that's the problem about doing things on our own a lot of times. Oh, I'll do it. Oh, but Netflix is on.
Mhm.
Oh, I'm gonna binge watch this whole series, whatever. I hear people doing that all the time. Then what value? Because here at Factum, I said we're a financial educational company. We bring so much education that you can consume when you're ready, not when I'm ready, because I typically go home around 5 o'clock, 4:30, 5 o'clock. Well, what if you don't get off till 5 o'clock? We can give you some content, educational content, that you can watch on your own. Consume it as you want to, instead of Netflix, you can educate yourself.
Also, not only just educating yourself, you're giving yourself the ability to be in control of your money.
That's so powerful right there.
Yeah.
Because when we start talking about, are you maximizing the benefits of where
Mhm.
you're holding your money, where we recommend, where we hold our money, is a savings environment, and it gives us 8 benefits. Well, a lot of people will tell us they put their money in the bank.
Mhm.
Okay, great. We ask why. Well, they say safety, right? Because money says FDIC insured.
Mhm.
We won't even go down that road, right? The second is liquidity, that's big, easy access. Okay, is there anything else it's giving you? How much is it earning?
Not very much.
Oh, 0.01%,
Mhm.
okay. Can you borrow against it? No, you either just withdraw it or leave it, right?
Mhm.
So there's all these other components that you're giving up to have that money. Well, what if there was a place where you can warehouse that money that maximizes all the benefits that you deserve?
And the thing is when you're gonna tell them where that is, people are gonna be amazed, because a lot of people might not realize that it's been there all along. And as a matter of fact, it's been there for well over
200 years.
200 years.
Yes.
Let's talk about that.
Well, when we go through tough money, one of the components in here is the savings environment. And where we recommend and where we hold our money is in life insurance, in whole life insurance. I know there's a fraction of people out there that say, no, buy term. If it suits you, term is appropriate. But we're talking about whole life and what we're trying to accomplish, what we're working to accomplish. And in whole life, it gives me guarantees, a competitive yield, constant compounding, privacy. If I didn't share this with, I don't know how many people are listening, people wouldn't even know I have it. And it's tax-free environment, the death benefit is tax-free. There's so
And
many
it's at
components to it.
it should, at your disposal
Yes.
whenever you need it.
Whenever I need it.
Mhm.
I don't have to qualify for my money. Remember I mentioned, when my father passed, I go to my 403B, my
Mhm.
qualified plan, and they told me, no, it's my money. No, you can't have it. Where I keep my money in life insurance, no. They just asked me, do you want to direct deposit it or do you want a physical check? Direct deposit, okay. If it's, well, we won't get into the weeds, but it's that simple.
Mm.
It really is that simple. And the power behind it all, one of the benefits of life insurance is the constant compounding. So if I borrow, let's just say I paid for my dad's funeral. Let's just say it was $10,000. I believe funerals are more expensive than that nowadays, yeah. So I borrow against my life insurance, $10,000. My money's still growing, it's still compounding within my life insurance policy.
And when you say it's growing, at what percent?
It's roughly around 3.5.
3.5 as opposed to,
0.01.
mhm.
So if we did some math on that, that's about 35,000%
Mhm.
greater.
Mhm.
Oh, and I have all these other benefits that go with it. So, we're not telling people to do anything drastic. It's just learning a little bit more and adding one step to what they're already doing and to receive the benefits that you deserve.
One of the things that you've also said many times that when you've been on is that this is something that the rich people do.
Yeah.
They know how to do it, and they've been doing it, and even the banks, the ones that are holding your money, they do it.
Yeah,
Right.
yeah. We talk about this quite often. There's something called BOLI, BOLI, and it stands for Bank-Owned Life Insurance. Well, banks are the most profitable business in the world, but where they hold their tier one capital is in life insurance.
Mhm.
There's something called COLI, COLI, corporate-owned life insurance. The same thing, Walmart.
And I think what you had said before, what
Yeah.
I really was that you really wanna teach people this, but to have it at the, I don't mean this badly, but at the layman's terms, so that anybody can understand it and anyone can do it. You don't have to be in a corporation
No,
or a
no.
big bank.
When I started this, I was a school teacher living paycheck to paycheck. That's where I started. And that's, when you say layman's terms, I like to say the you and I level.
Mhm.
I don't need a lot of money to start it.
No, and that I love that, the you and I level. And this is what's important for you to understand, that money is an education.
Money is a tool. It's like, you had your iPad out here,
Mhm.
and I don't know how to use that. But I'm sure if you sat
I
down
only
with.
do it a little bit, but
Even the little bit you did, if you showed me how to use it, then I would know how to use it.
exactly.
That's the same thing with money, and that's the same thing with life insurance.
Right.
If that's all we're doing,
I,
right?
100%, I
Yeah.
agree with you, because, you can have money, but how you make it grow and how you
Mhm.
make it work for you, and having somebody teach you how to do that, and when you do and you're a good teacher, that's what's wonderful, is because, and when the light bulb goes off,
Yes.
right, you've seen the light bulb go off of me just a couple of times, but
Yes.
I'd try. Now, you can check him out on his website, it's factumfinancial.com, hang tight, we're gonna be back in just a minute. Am I doing okay?
Mhm.
Okay, so we're gonna keep on talking, because again, we're still
Yes.
live in the room. This is our hard break, so this is our longer break.
Okay.
Do you need to get to something that you want, so that
No,
I don't mess that up?
I just, because we did talk about the infinite banking concept,
Mm-hmm,
and if you notice here, that's stage 4, and you did mention the word control.
I did.
Even though I have control in all these stages, but I'm a former high school coach, and if I was gonna teach you how to hit, we have to do it in progression. I can't just put you in the batter's box and having, I coach fast pitch softball. If you watch the college game today, these girls are throwing 70+ miles an hour.
I know, they're amazing.
Well, if you're learning how to hit and I put you in the box to face 70 miles an hour, are you gonna have any success?
No,
No, we gotta learn
from the beginning.
from the beginning.
I like that.
And that's what we created these stages of whole life. Stage 1 is a saver, learning this financial education, going through tough money. Your financial awareness, once again, going through tough money, answering those 5 questions. Coming up with a saving strategy and maximizing those benefits of your savings where it's held. And then stage 2, we talked about debt. Part of our financial awareness is knowing your DTI.
How do I know if I'm sorry.
No, you're good.
I
Go
went
ahead.
and did it. Like I have a life insurance policy.
Mhm.
How would I know if it's whole life or not, or term?
You could just probably look at it, if you looked even at the at the company, it could probably tell you. And then typically up on top, it'll tell you what it is.
Mutual of Omaha, I think it is.
Mutual of Omaha could be,
I think it's a whole life.
could be a whole life.
Because it is a life insurance with living benefits.
Okay, the thing with Mutual Omaha, if I'm not mistaken, they're a
It
stock.
may not be, I think it's something else. I'll get it, it's National Life, I think.
So, yeah, we'd have to take a look at it. Because.
So if I already have one, that's my question.
Yeah.
If I do already have one, can I start there? Or do you have to-
Depends.
Okay,
Depends, how it was designed, but if it is a whole
Probably
life, you
not.
should have cash value, where you can borrow against it, whether it's a stock company or a mutual company.
I don't know if I can borrow against it. I don't know if that means the same thing as, when you have life insurance with living benefits. Is that borrowing against it?
It could be, because living benefits can be.
Do you have to pay that back?
Well, this is the neat thing about life insurance, and this is going back down into the weeds. But when I borrow against my life insurance policy, all I'm doing is taking a prepayment of death benefit.
Right, same, okay.
So when I
So it's-
talk about the guarantees.
Oh,
right,
but it's your death benefit, okay.
So if I do not pay it back with my policies, all they're gonna say, and I'm just gonna use this as an example, let's say I had $20,000 borrowed, and my death benefits just say 100,000, and the good Lord calls me home. 100 minus 20 is 80. That's what my beneficiary would receive. They'll just take it off
Yeah,
the
right
top.
there.
Yeah.
No wonder.
Which is great, because if you start talking about money again, is a dollar worth more today or in the future?
I think, I don't know.
Well,
Is that stupid for me not to know?
no, it's not.
But I tell you why I don't know, because sometimes today it is worth more, and then money goes down.